Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Tuesday, June 4th, 2019. Well, the rubber bands started to snap back today. We were very stretched to the downside. So I use that analogy quite often. You get stretched, you're going to snap back. The harder you stretch, the more you're going to snap back. So we had, big up day, QQQ up about 2.8% today. Nice gain. And what it managed to do technically, other than just a big green candle that wiped out yesterday's candle, and that is technically significant. It's not a bullish engulfing or anything like that, but what it means is that everybody that shorted yesterday, I refer to those as the JCL shorts, Johnny come lately, that those that didn't want to short here and here and here when you had the trend line breaks and the sell signals, but you start to get bearish at this point when you're so oversold. And so what it means now is all those shorts were trapped. And when the market started going up today, and especially once it took out yesterday's highs, it means every single person, entity, algo that shorted yesterday was underwater today, and maybe by quite a bit, especially if they short at the lower end of the candle. So that has just near term, again, I'm viewing this as just a counter trend rally, one that's been coming in, and to help to confirm those divergences in the charts on the 60-minute. We'll get to those in a second. And you also, we had one of the deepest oversold readings in the RSI, so there could be some more upside to this. I'll give you, as I usually do, I'll give you my very near-term views, and then also the kind of intermediate and longer term. But so again, last time we were this oversold was back at the December lows. We got a little more oversold than that, and then back here a couple times. So again, it's just why you don't want to short, even if there's a possibility, which there was, that the market could break and go down, that the risk reward is just not attractive. Now today was interesting because he had plenty of time to get out of short, or we did gap up. Don't get me wrong, but also plenty of time to get in for a long side trade. In fact, let's go to the futures, and let's just start out here with the post that I made this morning. When the markets are moving a lot and there's a lot of activity, I'll always post. I'll try to get some charts out pre-market. This one happened to be members only because I covered a lot of the other recent trades that we've been highlighting and watching recently. We closed our wheat long out yesterday, hit the final price target almost perfectly to the penny, and then reversed a couple pennies above, and then reversed. And updates on other things out there as well: gold, the euro, the dollar. Crude oil, can't even remember what else, but this is the chart I wanted to cover. So this morning, posted, there's those divergences that were still intact. And again, this is a futures chart from about 8:30 this morning. There's a time down there, 8:27, if you can make that out. And so basically we had rallied back up to the same level from the previous day, and we had started to pop above it, 27.65.75. We'll call that 27.66 or so. So there it is. The ES is trying to pop above that level if it can break and hold, especially after the closing bell, because that's when the big boys come in, the institutions. Your futures move around at night, but the starters step onto the field to play ball at 9:30. Those are the institutions and the big boys. Then that should be the catalyst for a move up to test the downtrend in the 2800 resistance level. So that's like I said in the video, that's 2799.50. That's 2800, and then you had the intersecting downtrend line. So let's look what happened today, and that's it. So again, this was a trade where, fortunately for even ETF traders, since it opened, markets open, you can follow futures. Even if you don't have a futures account, you can go to investing.com. They give you free streaming futures quotes and charts. You can track the futures there. And some brokers offer you futures charts, even if you don't have a futures, not trading futures with them. And that's it. So you can see this is live right now, 2804, close enough for government work. There's the trend line. In fact, that trend line moved a hair. It's got to come in and catch this reaction. So here it is. So we popped 2800 by just a hair, a couple points for all intents and purposes. That's a close right on that level, and that's about the 280 level on the S&P 500. So near term, long term, short term it's bullish, because we, again, for the reasons I mentioned, kind of get a little short squeeze going. A lot of this undoubtedly were those people that shorted late. or stayed late to the party and had were squeezed out today. And you also have bargain hunters come in. As I said, there's still some FANG stocks, some market leading stocks like Apple, which is one of our long trades. It hit support the other day. Intel as well. I'm sorry, Apple's not at this time. That one had to stop run for a very small loss. I think it was at less than 2% stop out last week. And then Intel is still long, and that one's really been holding support. So we have quite a few stocks that are near support, and so I want to show you. So here we are. That's a healthy run into a pretty extended run into resistance. And again, this is the S&P 500. The E-mini futures, they were up or are up right now 2% on the day. Now that's a significant resistance level. I don't believe we'll go through that, and I said this in an update today. I expect a pullback here from this level, as bullish as today was. It is certainly possible to continue going on through there, but I would put pretty good odds, and I favor a scenario for a pullback in the futures here, probably in the overnight session, maybe into tomorrow morning as well. Maybe a minor pullback could be somewhere around this, or maybe a little deeper back down here to about the 2765 level. And in doing so, what it would do is give us an inverse head and shoulders pattern. Now let me say this. Inverse head and shoulders patterns from the old textbooks I read, years back, that were, those are, and what I believe to be patterns that should form on daily or weekly charts spanning several weeks for the pattern formation to several months, not intraday chart stuff. However, since I've been doing this, and over the years, I've seen a lot of traders throw out these head and shoulders and inverse head and shoulders patterns. Inverse head and shoulder, by the way, is a bottoming pattern, comes after a prolonged downtrend, whereas a head and shoulders topping pattern looks like this. You have a left shoulder, a head, and a right shoulder, and then your neckline, and that breaks down, and your measured target's the distance from the head to the neckline. This is just that in reverse. So if we get it, here's what I was trying to say is, it doesn't matter whether it technically can form on a 60-minute time frame like this or not. All that matters if enough traders are watching it and believe that, it becomes a self-fulfilling prophecy. Because if you get a pullback, and by the way, I'm just throwing out a potential very early. I mean, there's 1, 2, 3 things at least that have to happen for that to even be an inverse head and shoulders. Number one, you need a pullback soon to put in the first part of a right shoulder. I'm sorry. Then you need a kickback up that puts in that right shoulder. And you want it doesn't have to be perfectly symmetrical, but the more symmetry you have in the pattern, the better it is. So there's step 1, 2, and then 3 is a breakout above the neckline. That's the trigger. Now, whether that happens or not, to me, it's moot. Whether we have a pullback that puts in a nice looking right shoulder. Why? Because what we have here is that downtrend line, very well defined, lots of reactions, plus price resistance right around the 2800 level. And I like nothing better to see dual, not one but 2 intersecting resistance levels for a breakout. It just makes the breakout all that more powerful if and when it comes. But with that being said, like I always say, resistance is resistance until unless taken out. So, for just a short-term tactical trade, I closed out my longs today, and then I started taking them pre-market when I saw the futures were holding up, and added in my last lot once we broke out of those levels and just wrote it up. And so I shorted there just below that 2800 level and actually added a little more. And I'll just, if we happen to climb through here overnight, I'll stop out right up in here. And if not, I'm just going to try to game a pullback trade. I'll probably trail stops down somewhere around. Again, probably shouldn't even matter for most people listening to this video. You're probably not a very active trader like that, but talking about a 0.8% pullback or so. And I'm not even trading ES. I'm trading NQ, so doesn't even really matter there. So that's what that would look like. And again, just something to watch overnight and or into tomorrow if let's just say the futures hold up and overnight, but then pull back in the morning and then can hold up and have another thrust back. But you really ideally want to see this level hold. That was our breakout point today, or a key resistance level, 2765-ish on the futures, and on a pullback, ideally that level should hold there. Any pullback. Otherwise, this was just sometimes you get them a one-day wonder, just a bear market rally, or at least we can't call this a bear market rally yet. Well, it depends on how you look at it. I'm getting off point now. I'm viewing the highs back in 2018 as the top in the market when most indexes top. But either way, as far as this correction goes, it may or may not be over. But this is pretty powerful stuff. Like I said, these divergences here, and the one thing I said as well in the previous video I did earlier today for members is don't worry. One thing I can almost guarantee you in trading and investing, the headlines will follow. In this case, technicals first, and then the headlines will come out and confirm the rally, or sometimes you get the headlines as a catalyst for the rally. So what I'm getting at, if we're going up this much more, despite how dismal the news was yesterday, like I said, I don't know if I mentioned this in the after the market wrap video at the end of the day or earlier in the day, but it was as if we reached a crescendo of bad news and negative sentiment yesterday. It certainly wasn't good news, and it could have, we could have had continued bad news. Had the market dropped today, all headlines probably would have been bad, and if not, doesn't matter, because when the market's selling down, even good news is taken as bad news. So enough of that. Sorry to ramble there, but I'm just trying to let you know that if you're wondering how can the market possibly continue up with everything that's just happened, well, it's the technicals that are going to drive this market right now, more so than the news. News may help pop a breakout or reverse a rally into resistance, but so that's what we're looking at right now. That's my preferred scenario. Pull back there, probably not worth gaming for anybody that took some longs, took them home overnight. Probably just set your you've got a good entry yesterday or somewhere today, set some stops, and this thing could run up here. That's my next target right there. Let's just keep it very simple and then get away from that. That's about 2840 or so on the S&P 500 E-minis. And now let's look at the NQs. Okay, this was also in this morning's post. Again, 8:30 in the morning, or 8:28 or so right there. There it is. NQ E-mini futures. We had that level more so I was watching on the ES, but so NQ still has some work to do, and these were the targets here. 71.26.52 we had a resistance level, same ones, the same lines from yesterday, and then these downtrend lines next that come into play. So all these line breaks are where reactions are expected. I'm sure sometimes you get a pullback, sometimes you don't. So right now, and to keep it very simple for NQ, if we can get some follow through tomorrow, which I'm leaning towards, even if we get a pullback first, 72.86 or so for a upside target, and that's going to be a shy of the wedge measurement here. This is more of a contracting price channel than a falling wedge pattern. I have alternate trend lines here. It's pretty shallow, but again, that's all I'm expecting, because I'm viewing this as most likely a bear market rally, and if so, these bullish divergences are not going to play out for what they would have during a strong or even just a regular uptrend in the market. Usually these 60-minute divergences is where I look to position long for several weeks to even months on a security, but at this point in time, they were fuel for the rally today, most certainly, as well as the oversold conditions. But so we get a little pullback here, which I'm favoring here. Let me get to the updated charts. I'm still looking at this morning's chart. So that was then. This is now. There it was. There's our big. Added this little minor downtrend line that was taken out, and you can see we ripped right up to, and look at that, to the button, parked right on that lowermost downtrend line that I had. Again, it's been on the charts now for the past week or more, and that's it. So that's why I'm favoring a pullback about from these levels. It could be a little more upside. Certainly, we have the next downtrend line plus 72.16-ish minor resistance really right there, but it also comes in with the downtrend line. So that's what I'm looking for on NQ. And if it's anything more than that, believe me, sometimes you get these one-day wonders. And if something happens overnight, I'll tell you, with the big move we had up today, it's probably going to take a pretty negative headline to knock the markets down overnight. I don't think it'll just slide and lose all of today's gains and then undercut yesterday's lows without some type of catalyst. Anything's possible. So, but as of now, my preferred scenario is come back, pull back here, a little quick, maybe drop. Here's support not too far below, about 71.26, and that could contain it And if that doesn't contain it, you have a little minor support here about 70.064, 70.64 I should say on NQ. And then again, targets about 72.86 or so. But of course, any of these levels are potential targets. This just right now, this would be my uppermost bounce target here for NQ. That's about 74.81. All right, let's get to the QQQ and SPY charts for you people that don't trade futures. And that's QQQ. Same levels I've been posting recently on the 60-minute chart. So QQQ did take out this downtrend at the close. Remember, I had it ES or the NQ futures didn't. But right before the close here, we popped a little bit above that downtrend line. There's that wedge type pattern. There's your divergences, which managed to hang in there. So we still have the confirmed bullish divergences in place. This would be the next stop, I think. Here there's a little gap to contend with right there, but I see pretty decent resistance around that 176.74 level, and think tomorrow, whether we get a pullback first or not, that's a likely target, and possibly up to here, so by the end of the week. And again, at that point, anywhere if we get there, I should even clarify, anywhere from where we're at now, I'll be looking for a place to reverse back long to short and I'm talking to get back into swing shorts. These are just tactical long trades here, bounce trades. As long as they look good, I'll let them run. But the levels that I'm looking at right now, and that could change depending on what happens, but I think anywhere in this zone right here, that would be my the zone that I'll be looking to re-enter some swing shorts and expect this rally to fizzle out. So we'll see what things happen, how things look overnight with the futures, and how we trade tomorrow when things open. Here's SPY. There's that small wedge I showed you yesterday with the downtrend line. That was gapped above today. So again, there was a buy signal for SPY traders. And right up there's that 280 level on SPY, which is a very important level, not just here on the 60-minute chart, but more importantly on the daily chart. We have this that key level. Remember back in the fourth quarter sell-off, we had 3 rallies back to that level. Each of those failed, and so that made that a significant level. Then we stalled on that level for weeks right here, pulled back, came above it, danced above it, danced on that level basically for a couple months, then finally walked away from it. But then we've just recently fell back. Oh, and on the way down, we hit it again a few times. So I think that's an important resistance level. And let me just say this. It would not surprise me in the least if that is the end point of this rally. You also have this downtrend line right here on the highs, but I'll show you again one on the 60-minute chart. It looks a little more accurate. So I think the upside on the bounce is anywhere from, let's just say it, from where we closed today to about another. Let me give you those targets here. Go back to 60-minute chart. I'd have to measure out on the futures what I showed you and correlate these levels, but right there, let's just say this is kind of what I'm eyeing right now, 284 or so, and that's only about another 1.25% upside. So I'd say, well, these would be my max bounce targets. They wouldn't be listed here if they weren't. Those are my max bounce targets right there, but my preferred range. And so, like I just showed you on QQQ, where I'd be looking, this is where I'll be looking, actually from about here anywhere. But I'll be looking for signs. What's the market doing? Where are the key stocks, the FANG stocks, tech stocks, others, all the 11 sectors of the S&P 500. There are just almost an infinite number of variables that go into, what I'm looking at. And so I may make the decision, on short notice to either close any longs or jump back into swing shorts. And I think that's about it. I think we'll wrap the video up here. You have the levels to watch. Like I said, don't trust, if it is a bear market rally, don't ever trust a bear market rally. They are certainly very profitable to trade, as today showed you. And it can be quite a bit more because you have two things going on during bear market rallies. The market falls so fast and hard, you become very oversold. Bargain hunters, once they see that the selling is stopped and things have turned, they step in and buy, and then you always have invariably shorts that stayed too late to the party or shorted too late and they're getting squeezed out as well, and that adds fuel to the fire. Because when you short a stock, you start going underwater, your stops are getting hit, you have to buy to cover. That's how you close your position out. You're technically buying the stock. You borrowed shares that you didn't have to begin with, but when it's time to close out your trade, you have to buy the shares. So that's what causes these rallies when you're very oversold, these very sharp, powerful rips. So that's it. Let's just pick it up tomorrow. We closed, pretty much parked right about at resistance with a couple resistance lines above. Like I said, some downtrend lines. So we'll call it a resistance zone area. And if the futures manage to power right on through there overnight, then we're going to gap up above those levels. If that happened, I think if we gap up tomorrow, I'll just get this out for you now. We'll probably come in back test the lines would be my guess. This is just probably a little too much, too fast. Plus, I think as I showed you in yesterday's video, we have quite a bit of pretty significant former support levels that are now resistance levels just overhead on a lot of the market leading FANG stocks and other things out there. So like I said, I think another way to put it, a lot of the easy money has been made today, I think, on this bounce. It doesn't mean we can't go up more than today, but again, the easy money with just a unidirectional trend day, they call that, where the market rises all day into the close. That's what we call a trend day. So tomorrow, like I said, either pop down in the morning or overnight in the futures, and if we happen to gap up, I'd probably be looking to fade that gap for a pullback and maybe back test this trend line. I'll have to go over all the charts I just showed you again and make sure everything correlates, because I don't trade off just one chart, and even if I'm not a SPY trader, if I'm trading NQ or RTY, I'm certainly going to watch SPY and factor that into my analysis. So I will wrap it up here and pick this up tomorrow. This has been Randy Finney with the Right Side of the Chart. Have a good day.